What's good? It's KYV back with another video, and today we're going to be going over fair value gaps. I realized I never uploaded the video on it, and I'm gonna just redo it because I think that I could have explained it better. But this is probably the PD ray. This is probably you need this in your trading. There's really no way to trade ICT without fair value gaps, even if you don't have them in your entry model. It is probably the most important thing on the higher time frame, other than draws on liquidity. And I'd even argue that fair value gaps are probably at the same level as draws on liquidity. And yeah, we use them for everything, just execution, higher time frame narrative. This is the number one thing that you need in your trading. So it's very important to master. So let's get straight into it, not wasting time. So what is a fair value gap? Fair value gap is a 3-candlestick pattern where the first candle and the last candle's wick do not overlap in the middle. What do I mean by that? Let's go over an example. As you see right here, we have what's considered a bullish fair value gap. It is these 3 candlesticks specifically. So the first candlestick has a wick, and the third candlestick also has a wick. As you see, these wicks do not overlap in between the middle candle, meaning that you can perfectly cross lines through this candle without hitting any wicks. So if you made a rectangle, that would be your fair value gap. And this is a bullish fair value gap. One thing I'd like to go over is that to identify a bullish fair value gap from a bearish fair value gap, you want to look at the middle candle. If it is bullish, that is a bullish fair value gap. If it is a bearish candle in the middle, that is a bearish fair value gap. Just remember that to avoid confusion later on. It does not matter what these candlesticks outside of the middle candlestick do. So if this is bearish and this is bullish, it does not matter. It just matters on what the middle candle is. So this is a bullish example. The wicks do not overlap. So what do fair value gaps tell us? It is an area for smart money to fill their orders, as there's a lack of liquidity in that fair value gap. Price retraces into fair value gaps, and typically it'll reject off of it. So fair value gaps are a retracement tool. So essentially, if you guys know and remember, market moves in higher highs and higher lows. Every time there's higher high, higher low, that higher low typically taps into some type of fair value gap, which sends us higher. How do we use it? We want to use high time frame fair value gaps to get an overall daily bias. They're also a perfect reversal point and take profit point. It is also a good place for price to manipulate into. If you guys remember AMD, high time frame fair value gaps are your best friend in that manipulation leg. For low time frame fair value gaps, we want to use that for entries. So that's about it. Let's get into some chart examples and go over how to spot them and how to enter off of them. All right, before we go over some examples, I do just want to get some reps in of identifying fair value gaps. So right here, we have one. Remember, 3-candlestick pattern where the first and the third candle do not overlap. First and the third candle's wicks do not overlap with each other, leaves a gap in the middle. So right there, I also see a bullish fair value gap right here. So you guys see, boom. We have a bullish fair value gap. Middle candle is a bullish candle. These wicks do not overlap, forms our fair value gap. Let's get some more reps in. So they can literally be any size. Boom, fair value gap right there. As you can see, bearish candle, wicks do not overlap. Here's a bullish fair value gap. Wicks do not overlap with a bullish candle in the middle. And guys, this literally happens all the time. As you guys can see, boom, we have a fair value gap here. There's plenty of fair value gaps all on the charts. It always forms. And you can't enter blindly off them. Again, you need all of these confluences to line up. It's like a liquidity sweep, any other confluence. So let's go straight into it. We'll start on higher time frame fair value gaps going into lower time frame. All right, so right here's a good example. We have a 15-minute fair value gap here. So this would give you like a daily bias. So since we go into this 15-minute gap, we would expect the day to be bearish. So right here, boom, bearish on the day. Now let's go over some more examples. Here's another one. We have a small 15-minute gap. Boom. We wick through it. And that's another thing I want to say. Until we close over a fair value gap, it does not become an inverse fair value gap. So if it wicks over like this is still a valid fair value gap. And as you can see, we tag into it and then we continue lower on the day. All right, now let's go to the 5-minute. So right here, there's this fair value gap. And how would we have entered off of here? As you guys can see, price respected it. If we wanted to trade off of it, we could have done something like this. Trade off of it, enter off the fair value gap, off the consequent encroachment, which is a separate video. But as you guys can see, respected. Let's go over like one more example. There's honestly not too much to talk about for fair value gaps. Right here's a great example. As you can see, we have our 3 candlestick pattern, 1, 2, 3. Middle candle is bearish. This is a bearish fair value gap. What do? We tag into that fair value gap, and it respects. So what would we want to do? That's somewhere we could take a trade off of. Target wherever you guys want. As you guys can see, it's offered a pretty good trade, all from this fair value gap entry. So just to review, use the higher time frame for more of daily bias or points that price can manipulate to during an AMD, and then use shit like the 1 minute for your entries. So like for example here, we have this fair value gap. Again, why is that a fair value gap? Because 3 candlestick pattern, first and third candle do not overlap with each other, the wicks, and we leave this gap in the middle candle. Boom, get that entry, and then we are presented with a trade. So it is a very, very, very powerful concept. Fair value gaps really should be the base to trading. It is one of the kind of like building blocks. You need to know it if you trade ICT. And that's about it for fair value gaps. So if you guys did enjoy the video, leave a like and join the Discord if y'all got any questions. It's a free community. That is it for this video. I'll see you guys in the next lecture.